While your company is far from being about numbers or ratios alone, it's important to know where you stand financially so you can make more informed decisions about things like growth, cash flow, or taking on new clients. Being able to talk to your numbers is critical because it allows you to put detail behind your plan, provides a base for key decisions, and allows for more transparent conversations about financing and expansion with your relationship manager. As you prepare for these conversations, you might want to think about a few key aspects of your financials. First, how comfortable are you with your costs? Do you know which ones are fixed versus variable? What are your key costs? In some businesses, this might be employee salaries. In others, it might be manufacturing costs or marketing expenses. What does your cost of goods or services sold look like? When considering if something falls under the category of costs of sales, ask yourself this question. Does this expense occur only when products or services are sold? Are you tracking your costs? You might want to have regular monthly expenses such as overhead, variable costs associated with sales volume, or regular but intermittent costs such as quarterly term loan payments. Be prepared to share your knowledge and the impact these costs have on your business both today and in the future. And lastly, are you seeing trends in your expenses that might worry you? You might want to look at payroll salaries, overhead expenses, and maybe even marketing or advertising costs, depending on your industry or market. What about on the revenue side? Are you clear on your projections? Can you talk confidently about these numbers and how they were calculated? Projecting the cash flow for your business could be helpful to identify timing issues, surpluses, and shortfalls. As an example, many businesses are not paid for their services immediately, but must pay their suppliers in the short term. Understanding these circumstances in advance and knowing your options helps to provide a clearer picture on your projections. How well do you understand the assumptions you have made based on how your company operates? As an example, knowing your age receivables and what percentage you have in current versus 30 days out versus 90 or even 120 days out. Something to keep in mind is that timing differences tell a very different story, and knowing when cash is received in and when expenses are paid out is a critical component of your overall story. These are the types of conversations you can have with your banker to gain their insight and get a second opinion. What about concentration risk? If you are looking to expand your business, banks will look to see if there's an opportunity to diversify your customer base. Think about how you might find new customers to increase revenue and improve your cash flow. This is where having a clear understanding of your pipeline allows you to have a more holistic conversation with your professional advisors and gain their input. Knowing your numbers allows you to be clear on your strategy, helps you make more informed decisions about your business, and positions you to ask for the capital you want when and if you are ready to grow. This is why your numbers matter. Your relationship manager can offer advice and knowledge around your numbers and contribute to your success.